connected, for want of a better word, is just because it's not a concept that is introduced to us in our traditional education. Most of us have gone to school and we've learned, as it relates to the finance subjects, I've only remember when I was in school, and I'm probably dating myself now, and I just remember principles of business, econ, and accounts. That was it. Nobody's going and breaking down the different kinds of markets you can invest in. So let us talk about foreign exchange and what that market entails, and how you as an individual, meaning you yourself, can actually leverage these markets for your own financial advancing, right? So first of all, what is Forex? Again, this is all in my own words with facts in there. So Forex is actually short for foreign exchange. That's really what it's short for. Foreign exchange. Now let's just look at those two words. It just means the exchange of foreign currencies. Really what it is. The foreign exchange market is the market that allows the exchange of currencies. It is what many people don't even know is that it is the largest financial market. I know from a fact that we believe what we repeatedly hear. There is no movie or no conversation that talks about foreign exchange. Most of them talk about the stock market. So everyone thinks that the biggest financial market is the stock market. Let me tell you this fact. Over 6 trillion US dollars are exchanged every day in the foreign exchange market. There are only 22 billion exchanged in the US stock exchange. The New York Stock Exchange is the largest stock exchange market, and it only exchanges 22 billion. 22 billion is still a lot, but 6 trillion is, by my calculations, and I hope it's right, I think 250 or 25 times bigger. Point being, it's bigger. It's the biggest one. And it's a market that, as I mentioned before, allows the exchange of currencies. Now, why can us as individuals access the markets? Why are we even talking about it? Because if we can't benefit from it, the conversation makes no sense. So we can access it because, number one, and I was, interestingly enough, just on a conversation a while ago, where they were sharing statistics on how many Jamaicans actually have access to internet and broadband, and over 50% of Jamaicans have access to that. So why is this a conversation that can actually benefit us? Because we already have access to the internet. We already have these amazing smart devices. Do you know what else is on the internet? All of the banking systems are interconnected, all of them globally, right? Every Jamaican bank, if you didn't know, has its international counterpart. There has to be a relationship between banks. That's how you can wire transfer monies. That's how we are able to facilitate remittances. So the banking system is all interconnected through online, internet. So if we have internet and the banking system is connected is online on the internet, then we somehow can get to that market. So we're going to talk about that a little later. But we all have access to this $6 trillion a day market. Now, you already participate in Forex. First of all, and I maybe should have brought this slide up earlier now that I'm doing this, but what we are exchanging in the foreign exchange markets are currencies. So everyone on this conversation, you're a Jamaican. We all, every single day, exchange our Jamaican dollar. Right now, we're exchanging it for Jamaican dollar. We will give our money for services. We will give it to buy a product. The more we spend, and I know now that the Young Investors Club, most of you are probably econ students, I'm assuming, right? So y'all learned supply and demand. I had to figure it out here, but supply and demand is your big topic. And here's the deal. If you are spending more of something, that means the value is going to be impacted, right? So the more we spend our currency, the value is impacted. And that component, us just spending money, already participates in Forex. Why? Because if our Jamaican dollar value changes, then our exchange rates, the exchange with another currency also changes, does it not? Some participation, guys. I can only see 2 videos. Let me see who else I can see. Or we just put it in the chat. If you can, if you want to nod, nod. If you want to say yes, right? Yes in the chat. because this, as I mentioned, this is not for me to just chat, guys. I turned off my camera. This is not for me to just chat. I want to leave this conversation with you understanding what's going on in these markets, right? So your currency, you spend, you impact your currency. We also have conversions over counter, meaning when we go to the cambios, we're purchasing and exchanging currencies right there. You participate in foreign exchange like that too. When you go to the banks to change your Jamaican to US, you're participating in foreign exchange right there as well. How about when we're importing and we're exporting? Like every single person on this conversation has a device that you're using right now to be on this call that was not made in Jamaica. It was imported. And so somebody had to change the Jamaican dollar to the currency of whatever country they purchased it from to facilitate you having the device right now. I have a Samsung Note, no, I have a Samsung something. I don't know, it's new. I don't know what it is, but it wasn't made in Jamaica. So the person that sold it to me purchased it from either the US or Singapore or wherever it was made. And therefore they had to exchange a Jamaican dollar to do it. Then in the same thing, if somebody wants to buy a Jamaican product from Jamaica, you're exporting it, they have to now change their currency to Jamaican dollars to facilitate it, right? So export and import, we're participating in Forex. We have relationships with other countries, guys, right? For example, we are, for example, okay, I studied in Cuba. Let me just share the example I know about. I studied in Cuba. So there are relationships between countries and governments that facilitate sometimes the exchange of a product for money, services for money. So I'm sure there was some kind of a system where, you know, prices were subsidized for my education in exchange for this. And these relationships also contributes to foreign exchange. And then, of course, the most obvious one, guys, everybody knows this. Yes, you know, we take flights, that thing, that part before COVID. You remember that, guys? Everybody was all about catch flights, not feelings. Remember those hashtags? Oh, I miss those hashtags. Guys, travel. We have to travel, so we have to exchange currencies. So we are participating consistently in the foreign exchange market, whether or not we know it. But why be a participator and not benefit from it? Why be a contributor and not profit from it? So let's talk about that. What are we trading? So I kind of answered it already. We're trading currency. So when we talk, I'm transitioning now from the general conversation of foreign exchange to the part now where we as individuals can participate and benefit. So we have to now become a foreign exchange trader, sorry, not door. And here's what I need you to understand. You are essentially an investor. All right, I need you to understand. So I don't want you to put on the cap of, oh, I'm just a trader, I'm a foreign exchange trader, I'm a trade foreign. No, guys, you're an investor. Get a little professional with it, okay? You are an investor because that's truly what you are. And you have this amazing ability to invest in one of the most, you know, the opportunities are always presenting itself when you invest in currencies. And why? Because of what I just said earlier. If you're spending more of the currency value, by the way, econ guys, if I spend more Jamaican dollar, does it gain value or lose value? Answer in the chat while I continue. But as you are spending a currency, its value changes. So if the value is going to change, if the value is going to appreciate, wouldn't you want to actually make an investment in something that has a lower value now and a higher value later? Yes or no? Yeah? Brianna, I can see you not nodding your head. Ma'am, participate. Okay, I don't know. So, okay, guys. So pretty much the asset here are currencies. Now, currencies values, as I mentioned, they go up and they go down. And currencies are indeed asset. They hold value. You can purchase them, therefore investing in them. And then when it gains value, should you exchange it, you would have released that currency, you'd have gained a profit from when you invested in it originally. And essentially you are an investor. Now, how does that translate to foreign exchange trading? This is why it translates there. Let's talk about why do we profit as a trader. So I kind of alluded to it, but let's look at this example I have on the screen, guys. So Euro USD. I use Euro USD simply because they are the two most popular currencies on the planet. They are the two most traded, used, spent currencies on the planet. And they themselves have a relationship between each other. So there is an exchange between the euro and the US, and it has an exchange rate, right? So here's a scenario for you. If the exchange rate goes up between the euro and the US, you will actually need more US dollars to buy 1 euro. That's what it's really saying. Because as the exchange rate keeps going up, you need more of the US to buy 1 euro. That would mean that the euro is getting stronger in relationship to the US dollar. That would mean the currency, the asset that gained value between the two of them was the euro. So let me bring this home, because I don't want to just be talking. As I said, I want you guys to leave here with an understanding. Jada K, what you don't know any? Guys, by the way, the econ students don't answer the question yet. Let me pause and get the answer. Guys, if you spend more of a currency, if more of a currency is being spent, does it gain value or does it lose value? If I attach a price to it, would I get a quicker answer? All right, cool. All right, I have a price for that. The person that answers correctly. Nobody's answering. Nobody knows that. Wow, guys. Supply and demand. I'm gonna move on and come right back. Okay, so, oh, see somebody answering right there. Moya says it will gain value. Did you remember learning? Oh, the economy of our future. That's interesting. Okay, let's move right along. All right, I'm going to come back to this. So guys, all right, so let's look at an example that we know. I'm going to just write on the screen, don't mind the buying the messy writing. Let's look at a practical example so you can understand in our terms. Let us look at what we know. We know the US dollar and we know the Jamaican dollar. What is the exchange rate right now, guys? Who knows it?
Is it like 148?
Okay, we're gonna work with it. It's 148. So I need 148 Jamaican to buy 1 US, correct? Yes. At the beginning of the year, this is what I absolutely do know, that the exchange rate was around 140. I traveled at the beginning of the year and I remember paying like 138, 140. So in January, we were at 140. So if in January we're at 140, and now in November we're at 148, can I ask you guys a question? Which of these two currencies gained value between the US dollar and the Jamaican? Who gained value? Who got stronger here? I missed what y'all saying. All right, everybody, that's okay. Everybody is saying the US dollar. Absolutely correct. Your US dollar gained value. And if you want to just process it out, because we have 20 plus people on this call, the US dollar gained value because you now needing more Jamaican to buy a US. If I need more of something to buy something else, then it is getting stronger. If I'm needing more over time, it's getting stronger. So everybody's clear on that. Everybody's always clear on that scenario. Now let's flip the script. Let's flip it. So this is October, and this is January. Oops, January. Let me change the color for this now. What happens if in February 2021, that exchange rate, what happens if it goes to 142? So between October and February, the exchange rate now goes down to 142. Who got stronger? Wow, we had a lot of answers before. Oh, okay. Ah, we are some smart people here. We're quick on the draw. Yes, guys. the Jamaican did get stronger in that period. Now, I need you to abandon the general notion. We already know that progressively over the years, the US dollar has consistently gained value with respect to Jamaican, and it is a stronger currency. But we're talking about this particular period, from period to period. We have moments where the US gains ground, but there are moments when the Jamaican gains back ground. There are those moments. Do you know? Let me ask a question now. If you knew today on November what is today? The 4th, hopefully, the 5th, whatever day of November it is. If you knew today that your exchange rate was absolutely going to go to 142 in February, if you had a crystal ball and you knew that, and we already answered the question that the Jamaican dollar is going to get stronger, which of the two currencies would be your better investment between now and February? Okay. Guys, yes, you are all correct. When you have a currency that is going to gain value and you have done the analysis and you have the information that is stating that, just like, let's carry it over to another kind of investing you guys understand, real estate. We're in Jamaica. Believe it or not, yeah, there's certain places in Jamaica that typically the real estate value just keeps gaining value. So if you had your dollar and you want to invest it knowing it will gain value between now and February, you're going to invest there. You're going to invest in New Kingston. You're going to invest in Cherry Gardens. You're going to invest in Jacksonville. You're going to invest in Beverly Hills. You get the point. You're going to invest where you know your investment will profit you. If between now and February, there's going to be a gaining of the Jamaican dollar in relationship to the US, that's where you want to invest, even for that short period of time. So when we are trading Forex, the majority of us are not looking to be in holding something for years, guys, no. And I understand the thinking, because generally when we're taught investing, we're taught per annum, and holding it for 5 years, 10 years, 15, 25, 30, 50 years. Yeah, that's that type of investing. But when you have a market that $6 trillion are there every day, when you have a market that, because of the spending habits and travel and import and export and all the things I spoke about, causes the value of the dollars in each of the current countries to change every moment of every day. That means the exchange rates are changing every moment of every day. Let me tell you this, you have a moment when the Jamaican getting stronger, and you have a moment where the US getting stronger. If you have the crystal ball, you can jump on the US side where they're getting stronger, and then flip the script and jump on Jamaican when they're getting stronger and profit twice. I'm gonna flesh that out a little more right now. But hopefully everybody gets the gist of what I'm trying to say. I took the time to explain this. All right, Kimberly asked $1 million question. I promise you there's a slide for it. Let's go. All right, so I wanted to just show you something. I had borrowed this slide, that's why it has number 2, don't worry, meaning borrowed it from another training I do. But what kind of trade? So again, in the example, I'm gonna reinforce it, Euro USD. If the exchange rate is predicted to go up, right? That means I'm gonna need more US to buy 1 euro. The euro is gaining value. Your investment, you want to be on the side of the euro. Opposite is true. If the exchange rate between the euro and the US dollar is predicted to go down, then you need less US to buy 1 euro. Guess what? The US is now gaining value. You want to invest in the US. Now, the reason you hear terms like buy and sell in the world of trading Forex is because buy is a language that communicates, I think the exchange rate is going to go up, Mr. Broker Man. So I would like to be on the side of investing in the euro, please. And then sell just means the opposite. So that's why they have those names, right? So you cannot relate it to real estate or to the stock market. In Forex, you cannot relate it that same way. It's just buy simply means anticipate the exchange rate is going to go up. And that is what is communicated. Sell means the opposite, but we're not going to get too technical. We're moving right along. I just want you to get the gist. Now, how do you profit? You profit when you learn to predict, right? That's what you're doing. All we're doing as foreign exchange traders are learning to predict. If you know the direction that is going to go, if you know it's going to go up, then you know which currency to invest on. You know what side to go on because you know which one is going to get stronger. And if you're correct about your prediction, that is how you profit in the foreign exchange markets. All right. So how do you become a predictor? This is now to answer Miss Kimberly's question. How do you become a predictor? How do you predict this market? How? Oh boy, Jada K, hi. Just want to say hi, shout out to you. Guys, you predict by analyzing. So we're not coming here, you know, we're definitely not gamblers. I'm certainly not going to gamble with my money. We follow rules. So as a Forex trader, you are now taking the responsibility of learning how to analyze these markets. There are three kinds of analysis that we do predominantly. We have a technical analysis. I'm going to demonstrate. You have a fundamental analysis that we do, and you also have something called sentimental. So technical means, you know, looking at those charts, all the zigzags that are going on in the charts, right? And they're literal technical analysis you can do just using charting and graphing tools. Fundamental analysis has to do with what the economy students would love, economic news, right? And fortunately for us, most of the time, the majority of the time, this economic news is calendarized, right? Just like right in Jamaica, we know the beginning of the financial year is in the second quarter, April the 1st, right? So we know that the budget is going to be red, and therefore budget predictions will now impact the sentiment. They all interconnect of the market. If you're telling me we're going to lower interest rates, then the sentiment of the market is, oh, yeah, we can spend more money because interest rates are lower. I can get my car, people are more excited, money will be spent out. It affects it. So all of them are kind of interconnected. Guys, I promise you, I did not study econ. Everything I learned on my journey right here. I only study sciences. So I'm here to tell you, even if you're not an econ student, regardless of your background, you can learn this, but you just, you know, plugging yourself in. Now I have a line at the bottom, borrow someone else's analysis. But before I go there, I just want to touch on sentimental. The sentiment of the market is the fact that, remember now, you know, we as human beings determine the value of currencies for the most part, because our buying patterns or habits of spending or habits of import and export, we're the ones that click the buttons and buy. We're the ones that decide to start the store and import and export and all these things. We are the ones that sit in the authoritative positions at banks. It's a human being, it's not a robot. So the sentiment is based on our feeling. So right now, for example, guys, if you could guess, if you could just give a little guess, what do you think the sentiment of the US dollar is right now today? Positive or negative? And why? And why? Exactly. Because of the election, and it's a super tense election, right? You know, it's a little bit up in the air. You have to be super careful if you're trading now, especially if you're trading anything with the US dollar because of what's going on, right? And so the sentimental part is important. Now, when I say borrow someone else's analysis, a slide further along will help you, because if there's someone that already knows how to analyze technically or knows how to do the fundamental or knows the sentimental, you have two options. You have financial institutions that have traders that you can plug into and they will do all of the analysis for you. Or you can find a mentor and a coach, and while they're teaching you, they'll be probably sharing some of their ideas with you because they already know what to do, right? But let's move on. Let's move on. So this is what one of these charts will look like. That's what a foreign exchange chart looks like, right? It's going in two directions mainly, up and down, right? So what you'll always find here is on this axis, the vertical column is the exchange rate. So clearly down here, the exchange rate was lower, up here, the exchange rate was higher. And you will literally see this graph plotting right now in real time. What is the current exchange rate? Now from this screenshot, we're looking at the New Zealand dollar, NZD, versus the US dollar. That's the exchange rate we're looking at. So pretty much if the exchange rate is changing, if it's strengthening, I need more US to buy one New Zealand. If it's weakening, I need more New Zealand to buy one US. That's what's happening. Or I need less US to buy the New Zealand, sorry. So we already went through this. We already went through the fact that if it's going up, I need more US to buy New Zealand. That means the New Zealand is getting stronger. But when it's going down, less US to buy the New Zealand, the US is getting stronger. So again, if you can become the crystal ball and predict, you will be able to position yourself to profit. And then there's a typical saying, we sell when things are high in the market and then we buy when they're low. I'm going to move on from that. Let's go on here. So how do we actually access the markets? We pretty much need to learn the trading process. So there is you, and you, outside of the fact that we obviously need education, mentorship, coaching, all of that, you're also going to need a trading app. Now, in the world of foreign exchange trading, most of us use the app called MetaTrader 4. So right here on your phones, if you go into your Google Play Store or your iPhone App Store, you'll find it. You'll find MetaTrader 4. It is an app that will give you real-time values of exchange rates between currency pairs and real-time graphs. So you can do technical analysis and you can get information on the specific assets that you're interested in trading. So you get access to the markets just like that. You'll also need a broker. So many of us would have probably had more understanding because it's more local and we were doing amazingly well, that our local stock exchange market was doing fabulously, right? And everybody was investing there. But you can't just say, hey, I want to buy stocks in Mailpack, right? Mailpack was one that was listed. You can't just say, I want to buy stocks in Mailpack, find $50,000 and show up to Mailpack or go to the Jamaica Stock Exchange and say, here's $50,000, put it in the market. No, you need a broker. There's always identified licensed brokers who are regulated and they have the permission to access the markets on your behalf. So they're the ones that are going to now advise you. They're going to charge you some fees and they're going to now execute your investment on your behalf. It is the same thing for the foreign exchange market. You need to get a financial broker that's foreign exchange licensed and regulated. Regulations are so important because when you take your money from your bank account and put it into these broker accounts, you want to make sure that if anything happens to your money, you have some grounding to stand on. You can actually have a legal case. Now, thank God, nothing has ever happened to my money over my 3-year journey. And we have really just focused on working with brokers that are regulated and licensed, and that's why. But that's important. You have to find a broker that's regulated and licensed. Now, none of these brokers are local. Why are they local? Because Jamaica, the Jamaican dollar isn't as strong to merit a broker here for the foreign exchange international market. So you'll find brokers in those regions where those regions dollars are strongest. So I mentioned earlier, US, of course, they're US brokers. Of course, they're brokers in Europe and the Eurozone. They're brokers in Tokyo and Japan. They're brokers in Australia. Those are some of our major currencies around the world. And of course, once you have yourself there, you have your trading app, you have your broker, you put yourself in a position to profit. Of course, importantly, make sure your Wi-Fi, broadband, internet needed, important for this particular transaction. Now, can anyone trade Forex? Absolutely. You have to make a decision. like I just said, I am going to learn this. I'm going to learn it. And then you have to have a real strong desire, because it can become something extremely lucrative for you. It can replace your income. It can supplement your income. It can create your goals and your dreams. There are people who have fallen into each of those categories. And so you have to establish what you want and why you want it. And then once you do that, you be committed and you absolutely be consistent on the journey. Awesome. Awesome, Roshan. Hopefully that's how I pronounce it. Yeah, I love IC markets actually. Yeah. Not so much traders way, but that's another conversation. Okay. So how do you learn? Now here's my recommendation. The shortcut is always to find a system. The acronym for system, if you break it down, actually spells out save yourself, stress, time, energy, and money. Now, that's okay, Holly. How in finding a system do you, no, I'm distracted. That's a juju right there. How in finding a system do you save yourself stress? First of all, if there's somebody that already knows exactly step by step what to do, and you are able to then plug into them, follow them, get that hand holding, get that mentorship and coaching in real time, it's going to save you a lot of stress for sure. It's also going to save you time. I'm here to tell you, on average, it takes a typical successful trader, because you have enough people out there that are traders, but consistently profitable, successful traders, not a lot, okay? It takes generally somebody to get to that point pretty much around 1.5 to 2 years, even up to 3 years, especially if they choose to go along the path of figuring it out on their own, right? How does it save you money? Trading, as I mentioned, is investing. And you're investing your money. So if you are unsure about what you're doing and you make the wrong moves in the market is quite unforgiving. You have to really know what you're doing. And so along the journey of figuring it out, you're going to incur a lot of losses. And therefore, absolutely, that's some money. Now, clearly, if you're going to invest in an education, if you're going to invest in mentorship, and if you're going to invest in software and tools, and why I say software and tools are so important, we live in listen, it's 2020, guys, 2020. We have an app for everything. Why wouldn't you want an app that will help you to do the majority of the analysis? Yes, of course. Really, there are ways to learn for free, Jonathan. Unmute yourself and talk to me about it. That's true. That is absolutely true. You can learn on baby pips, and guess where you're going to, where it's not free? When you're making the mistakes and losing in the trades because the strategies are not that clear. That's what I mean. You understand, Justine and Jonathan? You will always make mistakes along the way if you don't have a mentor. I'm not saying it's the only way, guys. Please understand, I said it very clearly. I am recommending mentorship for people who want to properly get there. And guess how you understood that, Jonathan? You got a mentor. All right, Stefan, link up with Jonathan. Jonathan can help you. So that's what I'm recommending. I'm recommending find a platform that provides you education. Babypips.com is a free platform. You may go and read, study, practice until you feel comfortable. And then after you do that, you practice with your demo. And then after you do that, and you're consistent and comfortable, then you're going to have to bridge the psychological part of moving from fake money to real. That bridge, most people can't jump it. Yes, Justin. Do you know what makes that part easier to jump though, Justin? Suppose I'm a 6-figure trader and I say, oh yes, we analyze Euro USD together. And I say, this is going to go up. Justin, you will find yourself much more willing to trust that process, knowing my results and knowing my track record, and knowing you're doing it along with me. So that's why I'm saying to people, you can get free, but there are other components in trading, like the psychological part of your money being out there and you handling it. And yes, you can have risk management, but that part is super hard for so many. But it becomes easier when someone is holding your hand, right? Oh my gosh. Okay. So it's great to have a mentor. Absolutely. So pretty much, okay, this was just if anybody just wants to, is already advanced on the course of trading. Pretty much I always tell people that when you're trading, you want to be able to ask yourself these 5 questions before you take a trade. And just a basic, just common sense. What are you trading? Meaning, what are the 2 currencies that you're looking at? What is the trade direction? Remember, we spoke about it, guys. We either can go up or down. When do you enter? Timing is everything. All right. If you want to go up, you want to get in at the bottom. If you want to go down, you want to get in at the top. And then somebody spoke about it, risk management. You, by the way, one of the biggest misconceptions about trading is that you can lose all your money. Everybody thinks, oh, if you trade, you're going to lose all your money. What happens if you invest in a real estate deal and a hurricane comes and blows down the entire thing? Didn't you just lose your money? I'm just saying, investment always comes with risk, but you can manage it. A lot of the people that invested in the stock market didn't know a pandemic was coming, right? So you have to always know that, yes, there's always an element of that I'm not in control of, but you can have a what I want to call it now, a parachute. You can have some protection there to say, listen, I'm going to go into this investment, but I'm not going to expose more than 5%, 2%, 1% of my account to risk. You are in control of that when you trade foreign exchange, right? So that's so important. And then now, what is your reward? And you notice that reward is the last thing we think about. Proper traders, you think about reward last. Always analyze the risk first and make sure your reward, my recommendation, try and make sure your reward is at least 1.5 to twice your risk before you even take that investment. You don't want to be risking and then you can't make double your risk. You know what I mean? So that's pretty much just my 5-step system. Before I take a trade, I have to be able to answer these questions. That's how I know I'm ready to trade. If you can't answer these questions, you're guessing, you're gambling, that's risk, okay? So pretty much you should be trading. Now I'm just gonna now step aside and allow for questions and answers. I know people have been already asking questions. I've been answering on the go, but this is just me making it just simple to just understand that it's not something super complex. Clearly, I want to make this clear. The actual skill of trading is complex, okay? Let's be very clear about it. But if you have the right system, it helps you, right? It helps you, no problem, Krish. I get some private messages, but it helps you. And, but I do know for sure that it's something worth doing. Why? It's an exponential skill set, meaning as you get better, your results get better. And your results are your profits. And so that's beautiful. It's a skill set that no one can hire or fire you from. You know what I mean? You know, many of us have been educated and are in careers or on the path to completing those things. And there is uncertainty. There's also a risk with that, guys. Was I guaranteed a job when I graduated? Fortunately, I did get one. But there's that risk as well. We get educated, we advance ourselves. There are no guarantees at the end of it, right? So when you trade and learn to trade, and as you get better, you start profiting more. You put yourself in a position where if you say, listen, I have a $200 expense, you can set a strategy towards and that achieving that goal. It's in your hands. It's in your hands. So I love it because nobody can fire you from it. It's a skill set that never expires, and it's exponential. So the longer you are on the journey, the more confident you become, the better you become, especially if you are, what I said on the slides before, committed and consistent. Consistency always pays. I heard, and I'll stop by saying this. No matter what you do, the principles of success are the same, regardless. But one of the biggest keys outside of belief in yourself that you can do it is consistency. If you're not going to show up every day and be on these charts, and I'm not making it seem like that, but if you want to get to 6 figures, oh, that's what you're going to need. If you just want to just pay some bills, few hundred, I would say an hour a day, 4 days a week of consistency will get you along that journey. But if you want to get there every day, get up, practice, or connect with a mentor consistently. I still connect with mentorship. I still connect with software. And I'm still learning because there's something I want to show you real quick. So this is a chart. Yeah, it's black. Sorry. I like a black background. I don't mind a black background, but it's pretty much showing you, ooh, okay. Where was I earlier today? Okay. So it's showing you, I was talking about foreign exchange trading, and I have to make this point. When you learn the principles of foreign exchange trading, you can actually trade anything in the financial markets. So this was a trade I was in this morning that just know that green means profit. Green. And if it colors in, if the blue and red colors in the green part, we made some money this morning. But here's the deal. It made me more confident to do it because I was doing it with a person that's a 7-figure trader, right? So I decided to invest in myself for some mentorship because I was like, I need to get better. But you know what we're trading here, guys? That says US Wall Street. It's not even an exchange. It's an index. So the same principles that I learned when I learned foreign exchange trading, I can trade things like gold because there's a chart for gold. Gold is XAU. There's gold versus the US dollar. Guess what? It has a chart that looks the same. What does the chart do? Go up and down. It just goes up and down. Let me go to a higher time frame, 4 hour. Right, guys? Every chart does the same thing. So you see, gold is going up and down, right? We can trade silver, XAG silver. What does silver do? Go up and down, right? You can trade oil. I believe oil is WTI. Yep, crude oil. Here we go. What does that chart do? Go up and down. Guess what else you can trade? I mentioned indices that may go over your head. You can also trade cryptocurrency. BTC USD. There is a relationship between the Bitcoin and the US dollar. Well, it's predominantly going up right now because of the uncertainty with the US dollar and because cryptocurrency is now being accepted more globally. More people are saying, hey, let me swerve into something before my US dollar starts shifting, right? And it's looked at as a safe-ish haven because it's now being more globally accepted. So it's been progressively going up, but it still went up. There were moments of up, and then there were moments of down, right? Now, what else can we trade? Guess what? We can trade the stock market. Yeah, we can come here and look for Apple. Let me look for Amazon. Let me see if Amazon, what is Amazon? Hey, where we go? Amazon. Well, what is that chart doing? Well, we're doing some ups and downs, aren't we? Guys, didn't all of these charts look the same? Big tip, if you're trading stocks, is the only one that you will not profit if it goes down. It's the only one, right? Because stocks really only appreciate when things go up. But everything else I just spoke about, metals, commodities, energies, cryptocurrency, Forex, indices, all of these markets position you to be profitable either direction. So once you learn one, you can now start diversifying your portfolio in various ones. So I am done now. So now Q&A. Any questions? Unmute yourself or type it in the chat. Let me see if there's anything in the chat. No, here's the deal, Justin. So, so Justin, you don't have to have You have brokers that will allow for you to trade indices like US 30, but they don't give you the lot size. I'm getting technical now, but Justine understands. They don't give you the lot size that's going to allow that. So for example, I am just starting to trade you indices. So I just use my regular broker and it paid me like 10 cents a pip same way. So I'm okay. I wasn't over leveraging or anything. It paid me like regular. But if you get a proper indice broker, yeah, they're gonna give you $10 a point. And they're gonna pay you out the 200. But then you need like you said, you need about 1,500 US to 2,000 US to go there. So because I'm just on my indice journey, I'm just getting the hang of the strategies, learning. And we all know, well, for people that don't know, Christmas time, remember sentimental analysis, guys. What does everybody want to do in Christmas? Chill, presents, eat food, have fun, right? Buy, spend. Nobody's focusing on these markets in Christmas. So Christmas is a time you have to just take caution, probably take a break in that week into New Year's from trading, unless you really know what you're doing. And so I decided that in January, I'm going to go hard with the indices. Yeah. All right, how do you emotionally deal with losses? Well, in the beginning, it was very hard for me. Let me take off this screen. In the beginning, it was very hard for me, simply because I just don't like to lose. Point blank period. I did not like to lose. I'm a risk taker, right? By nature, I'm going to be like, I can try that because, you know, nothing tried, nothing done. So that's how I am. I'm a try. But I don't like to lose. So when I'm trying, I never thought I would lose. And then one of my friends that's actually a six-figure trader from Trinidad, he came here to visit one day and he helped me to realize that my first problem was I had a bad attachment to money. So if it hurts you to lose money, then that's the first thing you need to, because the reality is you are going to lose sometimes, but you're managing these losses, right? But you're going to lose sometimes. The goal is you want to win more than you lose. And remember, I mentioned, if you're risking 1%, make sure the gain is 2. So when you win more than you lose, if you even lost 50-50, if you lost 5 times 1% is 5%. But if you won the 5 times 2% is 10%. You're up 10, you're down 5, your net profit is still 5. Even with a bad risk win to loss ratio, 50-50, with proper risk management, you can still grow your account. So those are the things that comforted me, that made me go, so even if I lose 50% of the time, if I maintain the rule of making sure that my profit is twice my loss before I pull the trigger, I will still win. And those things help to comfort me. I don't like to lose still, but I know I'm going to win in the long run. So your risk management plan is going to help you to win. And then also detaching yourself from money. I really just thought about it. Sometimes when I lost, I remember my first biggest loss, I lost $200 US. That was my first biggest loss. And it was rough. I stayed away from the markets for like 3 days. I didn't even look at a chart. I was just like, but then I thought about it and I said, Marsha, you have, first of all, you spend thousands of dollars on education. And at that point, I have not found any opportunities in the markets after 8 years of working as an engineer. So that's another thing. So I'm like, that didn't quite pan out. That was thousands of dollars. So $200, really? And then when you think about your typical habits as well, I've seen myself spend $200 on things that did not advance me as a professional. It didn't advance my capacity in any way, if you understand what I mean, right? I've spent $200 on food, on clothes, on Amazon, and back in the days, parties, and none of these things advanced me. So how I looked at the loss now was a lesson. So if you start looking at your losses as lessons and your tuition, right, towards getting better, then, so it's just shifting your perspective. So if you have like, okay, I'm right beside my trading desk, and I have this little whiteboard that I will write things on, right? I have the whiteboard, so it needs to be updated now because I'm over this stuff. So I'm good with this stuff. So like if you have a problem with losses before you start trading, have a little whiteboard and write it. If I lose, it was towards me learning how to get better. Make sure that my risk to reward is always 1 to 2, so that even if I have a bad streak, I will still end up in profits. Say these things to comfort yourself. All right, that's how you deal with the losses. Any other questions? That's how I deal with the losses. And then don't revenge trade. It's the worst thing you can do. That's how I lost the $200. If the trade is going bad, just let it go bad. That's what I have to say. Let it go. Don't go, oh, I'm going to get it back. I'm going to get back the market. You can't get back nothing. And then when you're emotional like that, guess what goes out the window? You remember those 5 questions I said to ask yourself? You forget to ask those questions you're in. And you're like, oh, no, I didn't check this. I didn't check that. Don't do that. How is my trading strategy? Like, how do you enter, exit, and whether? Hey, Justin, you need mentorship. Call me. Call me. I don't set and forget. So even though somebody says, okay, let me put in my name is actually my Instagram handle. It's best to get me there, right? I was going to say that the reason why I decided to trade indices like US 30 was one of the things you have to become quite aware of is your personality. If you're an impatient person, then I could tell you personally, Justin, set and forget doesn't work for me. No. I need something that shows me some kind of profit or at least get me to break even. So what do I mean, guys? Let us say we enter the trade here and I know that it's going to go up to here, right, guys? We know the exchange rate is going to go up. And we put our risk here so we can establish that this is my 1%. If it goes beyond this, 1% is lost and that's it. I lost 1%. Okay, no problem. But at least I didn't lose everything and I can trade tomorrow. But this is where my 2% is set. One of the things you can do is you can establish a strategy, and I will give you this tip, that when the trade starts moving towards your 2%, shift your risk to the entry so you don't have any more risk anymore. That's the only way I'll set and forget a trade. That's the only way. I have to see that the trade moved away towards my target and I've shifted my risk to 0 risk, meaning move it to the entry point so that I'm no longer exposed. That's the only way my heart can be at peace. It can so be at peace, but if I can't, personally, I can't do the set and forget thing. Otherwise, it has to be break even and then. So I will sit in a strategy that allows me to wait for it to go in my direction, protect my risk, and then I can forget it. So that's my set and forget strategy. But the reason why I choose to trade things like US 30 is not because of the payout. It's because of the fact that it pays me in a shorter period of time. The trade that I won this morning was 35 minutes. 35 minutes. Who can find 35 minutes or 1 hour in a day to analyze, to sit with someone, to wait for the thing, to jump in, and in 35 minutes, you're in profits. And that was a significant profit trade. That was 200 pips in 35 minutes. Anybody know trading 200 pips in 35 minutes? Yeah, with the right broker, it pays out 2,000 pips, but that's another conversation. Guys, I would sit and wait for that any day. By at 10 o'clock, I was on cloud 9. I was like, it's a good day. It's a good day. All right. So yeah, any other questions? Is there an advantage using IC markets? I use hot Forex and I use IC. It just depends on the asset you're going to trade. And here's the deal. You just have to test and try them. I'm using hot Forex right now to trade indices, and it was this morning as I discovered, oh, you're not going to pay me $1 per point. You're going to pay me 10 cents. I see. So now I'm going to have to swerve from hot Forex if I'm trading indices. So it's just a matter of trial and error. But hot Forex is a phenomenal broker, great customer service. If you're picking a broker, 3 key things, guys. Number 1, licensed and regulated. Number 2, great customer service. And number 3, when you open your broker account with them, test the following. test how easy you can deposit money, test how easy you can withdraw. Okay? Deposit and withdraw. Make sure you can get your money back, and that the time to withdraw your money is short. So you just expose probably a little $10, $20, right? And take that risk before you dump all your money into a broker. And then when you're ready to pull your profits, you're having challenges. Nope, test it out first. Okay, what's your favorite strategy? Like, okay. I use a strategy called smart money. Some people call it smart money concept. Some people call it institutional trading. That's my strategy. And I just trade price action and structure. But not many people have a course out. Not many people have a course out on smart money. So the platform I use has a series of educators that teach specifically smart money, and that's my jam, especially with US 13. Jeez. Yeah. Okay, awesome. Do you pay commissions with IC markets? I believe I do. Yeah, because some of them is fixed payments and some is commissions. I just can't remember which one is which. Again, if you go to icmarkets.com, it will literally give you all that information. All right. All right, guys. So any other questions? I want to wrap up because we've been here for an hour. Not that I mind. Not that I mind. But do we have any other pressing questions right now? Or everybody is kind of okay? Everybody's okay. All right, cool. Well, it's absolutely my pleasure to have shared this with you all, to have just made the connection, made it a little bit more, you know what, relatable. Because the way how, after I removed all of the technical things, because I'm super technical, because I'm an engineer, I get technical and I understand. But when I got that technical, my mind got very foggy. So I had come to a point in my journey where I had to strip all of that and start over and just be like, what am I seeing? Make it simple. And then until I started making it simple, then it didn't start making sense. And so because I got to that point for myself, I always just try to make just the basic, just the fundamental that you can stand on right now, simple. You know what I mean? So I'm glad to have done that. And thank you, Michael. Thank you, everybody. And I hand it back over to Hallie. So thank you guys for having me.
Thank you, Mrs. Miles. I personally learned a lot, and I'm sure everyone in the club learned a lot as well. Guys, please remember that her Instagram handle is in the chat. So any other questions or if you want any mentorship or anything, you guys can go towards her, because obviously she's very good at teaching and very good at informing others about the topics that you really need to know. So thank you again, Mrs. Miles. Very informative presentation. Lovely to have you.
Also, guys, remember the Forex challenge begins. I sent the link in the chat for the group chat pertaining to Forex, and the PDF entailing all the details of the competition will be in it. Also, I don't know if Garth is here now, but Garth is our winner this week for the business challenge. And I believe that is it. So thank you guys for coming out.
And the resources that we provide, the YIC Forex group is a good way to learn lots of stuff. And again, remember Miss Marsha-Gaye.
Also sent her Instagram in the WhatsApp group chat. So if you didn't see it here, it's there. All right, enjoy the rest of your week, guys.
Bye, guys.